Private CFO and CIO David Royal with over $200 billion in assets under management. Your thoughts on what you're seeing right now, in particular, this change in direction for the markets and the strategy about not getting a rate hike in September, but at least the Fed could likely pause and have good reason to do so.
I think they do. I mean, it was a weak report this morning. I mean, it disappointed by 103,000, as you mentioned. There was also 103,000 of revisions. So that really kind of changes the picture overall. You know, at the end of 2025, we had some weak employment data, and then two of the first 3 months of the year were weak. So the second quarter was strong, but now a lot of that strength has been revised away. So, you know, the market had been pricing in a September cut. I looked a minute ago, it was about a 44% chance or hike, excuse me. And I think it's going to be hard for them to hike in September now.
What's interesting, David, is that, you know, now with Kevin Warsh's change of direction and communication at the Fed, you're changing how you look at the data. The data has become much more important to you. So I'm glad that we're talking about this data from the morning and, of course, the inflation picture. But at the same time, when it comes to inflation, you say that this isn't about energy prices. You say the waning effects of tariff rollbacks, which have kept core goods inflation essentially flat the past few months, is something that you're carefully watching. Explain that.
Yeah, I mean, the concern would be that some of the tamer inflation data we've seen the past couple months followed the Supreme Court decision and tariff rollbacks because core goods inflation was essentially flat. If we were to see a reacceleration in core goods inflation, it would be hard to keep core CPI from rising.
Okay, so we're going to be watching that data. What about the volatility? We've got the VIX below 15 right now, so we're at 14.84. So, the markets are in a very calm place. Question is, does that last? Did second quarter earnings give us enough power through to continue the momentum?
Volatility's been low. Other than, the brief geopolitical events and then the tariffs in 2025, we've had pretty low volatility. And I think the market's maybe getting a little bit complacent. When I talk to our advisors and our clients, I certainly tell them to expect levels of volatility in excess of what we're seeing right now.
Something else that I was looking at, and this kind of caught my attention this morning, is annual wage growth in that jobs report, 3.2%. That's a slowdown. What does that mean for, if you're going to be watching more data, as you say, what does that mean for consumer sentiment? What does that mean for retail sales? And does that kind of pile on to a wall of worry for the market?
Well, the wage growth certainly was weaker than expected. And, real wages did turn negative for a few months because of, the uptick in inflation. And I think that's weighing on consumer confidence. I mean, despite the relatively strong macroeconomic backdrop, we're at all-time lows or near all-time lows for consumer confidence. And I think that's because nominal wage gains have not kept up with prices since, inflation really started in 2022.
Yeah, you've got some stock picks here, and I want to get into these with you because they're actually very interesting and very diversified. Limbach is one of them, LMB. This is a mechanical, electrical, plumbing, large scale. And then you also like Griffin Corporation, which is building. So I think that's interesting. You're looking at, is this a data center play or is this more of just an economic recovery play for these two names?
I think there's a couple. I try to bring you some interesting names. We're also overweight the hyperscalers, but you probably have plenty of people coming on and talking about NVIDIA. Limbach's a micro-cap company. It's got a market cap less than $600 million. They're changing their business model. As you mentioned, they're an HVAC company out of Pittsburgh. They're moving from a basic subcontractor model to partnering with the building owners and having much more of a higher margin recurring revenue stream. And then, as you also mentioned, they are something of a data center play. They just announced an acquisition this week of a small professional services firm that consults around data center build-outs. And their earnings weren't well received this week. The stock's down about 30% this week. So I think it could be a good entry point for Limbach. Okay.
And Griffin Corporation garage doors. That's interesting.
Yeah, what could be more exciting?
Hey, you know what? Whatever works. You've also got Lifetime Group and you've got Restoration Hardware.
Sure. Griffin, nation's largest residential and commercial garage door manufacturer. I think there's just structural tailwinds. We're behind in building capacity. It tends to be a non-discretionary purchase. When your garage door breaks, you need a new one. It also tends to be one of the highest returns on investment for homeowners if you're looking to sell your house. And it hit a 52-week high, as you can see in the chart. Great company, but we still think it trades at a pretty attractive multiple. And they've been buying back quite a bit of stock, which we like as well.
All right. Interesting story, certainly, as well. David Royal, thank you for being with us on this Friday. Appreciate it.
Great to be here.